Good morning, and you're watching Market Cafe on ET now with me, Vinny Motiwala. Along with me is Harsh Saita as well. Very good morning to you as well, Harsh. And what are we seeing in terms of the global cues coming in? What is the handover looking like for the Indian markets now?
Well, yes, Vinny, extremely interesting that you speak about the handover. What we saw on Friday was US markets were flattish, Vinny. And what we are currently seeing is that markets are seeing cuts, especially US markets, on the back of a stronger than expected ISM data coming in from the US. And that means largely, or that implies largely, that US manufacturing still continues to look strong. Purchasing managers in the US continue to buy and continue to do very well with regard to their purchases, which means that the economy is still hot. What this typically implies is that there is still headroom for the Federal Reserve to continue hiking rates, because there's no slowdown in manufacturing that's coming through. And we saw that, and that was reflective even of the payrolls data which came through on Friday, and that actually has led to US markets closing lower. So we've seen a 1.4% cut on the Dow, which is quite sharp. We also see the S&P 500 down 1.8%, and the Nasdaq is down nearly 2% in trade at close yesterday. That has reversed slightly in early trade today. So we're seeing the futures slightly reversing that trend. With regard to where Europe is taking a cue from the United States, Europe too largely in the negative, except the FTSE. The FTSE was up around 0.1%, marginally higher. But other than that, we're seeing cuts across the board. The stock 600 was down 0.2%. So that's where we're currently at, where US and Europe are concerned, and that's the handover which we're getting in early trade today.
That's the handover coming in from the US markets. But Harsh, when we look at the commodities market also, actually look at the gold prices also yesterday. They were trading about that 1,800 mark. Even crude oil was trading higher. But we've seen a fall coming in overnight in the crude oil prices. Oil prices fell, sharp fall that we saw coming in terms of the oil prices. They fell as much as 2%. As of now, they're seeing with mild gains coming in as of now, where the WTI crude oil prices trading somewhere around the about the $77 per mark, while Brent crude oil is somewhere around the $83 per mark. Now, yes, overnight, what was the main reason for the fall coming in? Because of the data that we see coming in, and possibility of Fed interest rate hikes coming. That is a bit of a worry coming in over there. Other than that, the US service sector data was also a worry coming in, which indicates that maybe we could see some aggression coming in terms of the rate hike policy as well. So yes, what we saw in terms of Brent crude settling somewhere around the $83 per barrel mark, while in terms of WTI crude somewhere around the $78 per barrel mark as well. Now, in terms of, let's just take a highlight in terms of gold prices also, because they slumped below the $1,800 per ounce mark as well, as Fed fears again surfaced about the rate hike policies, tightening of policies. So yes, that there was some pressure coming in on gold prices as well. And as of now also, you're seeing that gold prices are continuing to trade below the $1,800 per mark ounce as well. So keeping an eye out on crude as well as gold prices today.
Well, yes, Vinny, and quickly moving on to what to keep an eye out for today. We are going to see the MPC outcome come out tomorrow, so we're going to see the MPC meet up later today, which will obviously determine where the market will go in terms of rates. December is going to be a month where the Federal Reserve as well is going to decide on their rates. The FOMC meeting is going to be there mid of December, and we are also going to see the RBI meet up this week. So we're going to see a couple of quick levers where we're going to see rate changes, possible rate changes, and at the moment the RBI is expected to hike by around 35 basis points, which is that they will take rates from that 5.9% mark to 6.25%. That's where at least the Indian rate hike is expected. Among other news as well, which one has to keep an eye out on today, is going to be the US October trade balances, the S&P Global PMI Services Composite Index. Bikaji is going to come out with its Q2 numbers. PTC India also expected to come out with its Q2 numbers as well. We're also expecting Hinduja Global Solutions. It's the last day to buy if you want to be eligible for that interim dividend. The NCLT is going to hear the Jet Airways resolution as well. So a whole hog of news which we would have to keep on our radar in trade today.
Absolutely, a host of events that are actually coming, and obviously tomorrow is going to be the important one as well. But let's move on and get started with some of the important headlines that we have. Let's not forget that the business activities in the U.S. Service sector continue to actually expand at an accelerating rate and pace in the month of November, with the ISM service PMI rising to 56.5 in the month of November. This reading came in better than the market expectations of 53.1% and has spooked Wall Street ahead of the last Fed meet for the next of the year. That is going to be next week, which is going to be the encouraging data could actually make a case for another rate hike. So that's a factor coming into play in the US market.
Well, yes, and moving on to Bitcoin. Bitcoin could drop to $5,000 next year in a market surprise that investors are underpricing according to Standard Chartered. Bitcoin has already fallen more than 60% this year after a string of high-profile collapses of projects and companies plagued the industry. Meanwhile, venture capitalist Tim Draper thinks Bitcoin will hit $250,000 a coin by the middle of 2023.
I think jobs cut is becoming the word for this last couple of months. Now, Pepsico is eliminating hundreds of corporate jobs in North America. The layoffs will affect employees of its food and beverage business in Chicago and New York. Pepsico told employees that the layoffs were intended to simplify the organization so that we can operate more efficiently. The cuts will be heavier in the beverage business because the snacks unit already has trimmed positions with a voluntary retirement program.
And Foxconn, the world's largest contract electronics maker, reported a sharp drop in November revenue after the company struggled with protests at the world's biggest iPhone factory in China. It reported a 11.5% sales drop. The firm said that revenue last month totaled to $551 billion, new Taiwan dollars, down over 11% compared to the same time last year.
And the electric car deliveries from Tesla factory in Shanghai rose to a record in November. The US automaker deployed aggressive marketing tactics and promotions in China. Tesla shipped 291 cars in Asia, the biggest economy last month, and almost double the vehicles delivered in the same month last year.
Well, I'm switching to Ukraine. Ukraine warned there would be emergency blackouts once again in several regions. A new Russian missile barrage had been anticipated in Ukraine for days now. The strikes plunged parts of Ukraine back into freezing darkness with temperatures below 0 degrees Celsius. Meanwhile, Moscow warned Kiev of drones intercepted on Russian territory.
Tensions between North and South Korea continue to escalate. The South Korean military claims that the North Korea has fired around 130 artillery shells into the sea of its east and west coast in the latest apparent military drill near the shared border. Some of the shells landed in the buffer zone and in what Seoul said was the violation of the 2018 Inter-Korean Agreement designed to reduce the tensions. It was only this year that North Korea resumed testing its long-range intercontinental ballistic missiles. Now, the ICBMs for the first time since 2017.
Well, I'm switching over. India is in a bright spot, says famed value investor and CIO of Aquamarine Fund, Guy Spear. He believes India will continue to stand out over the next few decades. Stay tuned for the exclusive interaction on ET Now.
India's star is bright and shining brighter. You in a certain way, you won the ovarian lottery to be born in this time in India and not, say, 50 years ago in India. And, thanks to the people like Nehru and Gandhi and others who brought India to this place, it's going to be a very exciting next 50 years for India. forgive me for just running it on just a little bit. Before the interview started, I was asked about Elon Musk, and I said that he's a credit to humanity, and I don't necessarily want to be invested in his companies, but I'm so grateful he exists, and I'm grateful that he's doing what he's doing. I've made a choice not to live in India, but I feel so lucky to be able to be a participant and to have a front row seat in the unfolding just glorious drama that is in India. India is a force for good in the world. I'm glad that India as a country exists. And just to go a little bit further on that, India is a naturally pluralistic place. India is naturally a place where there's huge diversity. Indians grow up understanding so much about what's important in the world. I thought that living in New York City, where there's also an enormous amount of diversity, was the very best place to learn about humanity. But I actually think it may be that anywhere in India is the best place to learn what it is to be human. So thank you, India, for being what you are, and thank you for the future contribution that you'll make to humanity.
Keep an eye out for that exclusive interaction. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more domestic update after this short break. Welcome back, and you're watching Market Cafe on ET now. I think it's time we actually look at what the Asian markets are doing and how they've opened up in trade as well. Most of them have opened up in the red this morning, except for Nikkei, which is trading with mild gains as of now of around 0.04% in trade. But look at Shanghai, look at Hang Seng, all of them have opened in the red. Shanghai is down almost 0.2% in trade. Hang Seng down 0.4% in trade as well. Now, in terms of ASX 200, which is the Australian index, that is also down with almost cuts of 0.2% in trade. Kospi too seeing a decline of around 0.5% in trade as well. So yes, given the handover that we've seen coming in, even Asian markets are a bit muted in trade today. Not much of an excitement coming in there. And even though we're seeing that Beijing will be easing some of the restrictions coming in terms of COVID, still not much of an excitement that we're seeing coming in terms of the Asian markets as of now as well. Seems like we're seeing a bit of a pause actually coming in terms of the market as well. And look at the SGX Nifty also, an indication coming in that we could be seeing a negative start coming in as of now, or a muted to a negative start coming in for the Indian markets. SGX Nifty down around 0.4% in trade, or 75 points as of now, Harsh.
Well, absolutely, Vinny. Looking at a muted day of trade, at least to start off, that's the indication. But moving quickly on, will crude remain volatile is the golden question, especially for India. Just prior to that MPC meeting, right, crude is a key factor when it comes to imports for India. But are the sanctions on Russia not just creating more problems for emerging markets looking to buy the cheapest possible oil? We caught up with Vishnu Prakash, who's the former ambassador, and Paul Hicken, who's the director, S&P Global Commodity Insights, asking the question, do sanctions actually work? Listen into what they have to say.
As far as I can make out, it is highly unlikely, because this kind of sanctions are generally ineffective. And sanctions as such, we find whether they have been imposed against Iran, whether imposed against North Korea, Myanmar, are a blunt instrument which do not hurt the intended target, but the most vulnerable in the country or the countries beyond. So Russia has said that it will not sell oil at the capped price, and would find other sources, other avenues where it can sell its oil. I must note that the cap is only on the seaborne Russian oil price, but the pipelines have been exempted. The Russian crude, which is flowing to Hungary, to Japan, to China, that will continue without any price cap. So that is how I look at it.
When you think about how a price cap works, well, for the Platts Urals grade, it's around early 50s, which is actually below the price cap right now. And to be honest, a price cap is kind of works in a way to you want your cake and to eat it too, and that's quite a tricky one to pull off. So there are difficulties, and if you look at the history of sanctions on Iran, Venezuela, often markets find a way around some of these sanctions. It pushes things into very gray areas.
And let's just talk about gold, what we have in terms of update coming in. If 800 kg of smuggled gold is detected on an average per year, this is an elephant in the room, says the Finance Minister Nirmala Sitharaman while addressing an event of the Directorate of Revenue Intelligence. She also added that the artificial intelligence is needed for a better detection of gold smuggling in the country. Let's go across and listen in.
If in our country 800 kgs are being detected on an average per year, I'm sure this is an elephant in the room. Can we do a lot more? Data-based, artificial intelligence-based, better mapping of what works to bring in the cycle of gold smuggling into India. I've been arguing sometime with the media that it is not the customs duty on gold which determines the extent of smuggling. Higher the duty, people feel, oh, there's greater leverage to be handled, and therefore there's more smuggling. And lower, the counter-argument to it, lower the duty, less smuggling. No, smuggling seems to have its own cycle.
Well, yes, that was the Finance Minister. But switching over, the winter session of Parliament is set to commence on the 7th of December. The government has listed 16 new bills for consideration. It intends to pass a total of 23 bills, including 7 pending ones. No major economic bills are listed in this particular session. Among the major bills not listed are the cryptocurrency bill, the banking amendment bill, and the personal data protection bill, which were expected to be listed in this particular session. My colleague Prakash Priyadarshi reported earlier today. Listen into what he had to say.
So the winter session of Parliament is going to be commenced from December 7, and the government has listed 16 new bills for the consideration of Parliament during winter session. Apart from that, 7 pending bills are there in the list of business. Altogether, there are 23 bills which will be put before Parliament for its consideration and approval. Apart from that, 3 Parliamentary Standing Committee reports are there which will be submitted on the floor of the House. The 16 new bills which is there in the list of business include the Trademarks Amendment Bill 2022, which seeks to simplify registration and managing a process of trademarks worldwide. Also, the Forest Conservation Amendment Bill 2022 is there in the list of business. The Multi-State Cooperative Societies Amendment Bill 2022 is also there in the list of business, which seeks to bring transparency in the functioning of cooperative societies. Also, the National Dental Commission Bill is there in the list of business, which seeks to set up National Dental Commission. However, key economic bills are not there in the list of business for the winter session of Parliament. Bills such as, Competition Amendment Bill, IBC Amendment bills are not there in the list of business. Bills related to regulation of cryptocurrency is also out of the list of business. However, personal data protection bill is not there in the list of business, but the government has given clear signal that it may introduce this bill during winter session of Parliament.
And polls in Gujarat are done. That means it's time to crunch some numbers. The poll of the polls is giving the BJP 132 out of 182 seats, and this is 32 seats more than the party won last time. It could be a disappointing outing for the Aam Aadmi Party if the poll of polls result hold. They have an average of 7 seats, while the Congress has an average of 41. Let's go across to Tamanna, who's standing by to tell us more on what this actually indicates. Tamanna?
Spoken about Gujarat and Himachal, but there's one more election which has been gaining a lot of traction, and that's the MCD polls in Delhi. Now, that's a municipal poll, and for those who are wondering why it's being clubbed with these 2 assembly elections, because in all 3, there is the BJP, the Aam Aadmi Party, and the Congress fighting it out. And some of those issues now have national implications. For example, has inflation impacted what happens in these polls? Now, let me just go through those numbers and the interesting bits of it. And I'll refer to the Times Now ETG poll, where the BJP is expected to get 135 to 145 of the 182 seats. So clear win for the BJP. But the headline number out of there, if you look at it carefully, is the Aam Aadmi Party is expected to get a 24% vote share. Their seats might just be 6 to 16, so that average comes up to about 7 if you look at the poll of poll, but a 24% vote share from close to 0 in 2017. And they've eaten into the Congress's vote share, which had about 45, 46 in 2017. A vote share is down to 23.4%. So in Gujarat, what used to be a BJP versus Congress fight always could, after this election, turn into a three-cornered polity in that state, with the Aam Aadmi Party and the Congress fighting it out for opposition. That would be a big, in that sense, move ahead for the AAP, and of course, the BJP's complete dominance over Gujarat remains. On Himachal, it's a photo finish. It could go either way. But if the Congress does not make it in Himachal, they have to wonder why that electoral trend where the government changes every 5 years between the BJP and the Congress was bucked this time. Why, despite Bharat Jodo, it doesn't seem to have any impact in Himachal if these exit polls are correct. So that will be some hit for the Congress once again. And in MCD, the polls are predicting a sweep for the Aam Aadmi Party, which previously was with the BJP. It will reinforce the Aam Aadmi Party's credentials as a Delhi party, which is being preferred by the people of Delhi. It will be a big move for them there as well. So if I had to put it very simply in a nutshell, MCD, Aam Aadmi Party, seems to be sweeping. Gujarat, the BJP remains in mega prime position, may have actually benefited from the AAP and the Congress fighting it out for opposition space, but the AAP makes a good debut there. And in Himachal, it's still too close to call.
Well, thanks so much for that, Tamanna. But with that, we'll slip into a very short break. More on stock-specific news on the other side of this one. Welcome back. You're watching Market Cafe with us on ET Now. Quickly moving on, we have the market, and up ahead at 8:35 we have Ramesh Iyer, who's the MD at Mahindra Finance. Mind you, Mahindra Finance declaring a strong set of numbers for the October month, for the November month, mind you, sorry for that. But quickly moving on, we also have Srinivas Rao Ravuri, who's the CIO equities at PGIM India Mutual Fund at 9:20. We have Girish Pai, Head of Research in Institutional Equities at Nirmal Bank, to speak about IT Services. He's the IT Services Analyst at 9:50 a.m. And we have Sonal Verma, who's the Chief Economist at Nomura at 10:20 to speak to us about the policy.
Okay, keep an eye out for that exciting lineup on the market. Let's move on, but Kirloskar Industries has requisitioned a EGM, that's an extraordinary general meeting of the Kirloskar brothers. Now, Kirloskar Industries demands appointment of an independent forensic auditor to examine the past legal expenses incurred by KBL. Anurag Joshi is joining in with us to give us more details on that. Anurag?
Amid the ongoing feud among the factions of the Kirloskar family, Kirloskar Industries has requisitioned for an extraordinary general meeting of the shareholders of Kirloskar brothers. Kirloskar Industries has called for the meeting to demand the appointment of an independent forensic auditor to examine the past legal expenses of Kirloskar brothers. To give you a little background about the family dispute, Kirloskar Industries is majority owned by Atul and Rahul Kirloskar, while Kirloskar Brothers is controlled by Sanjay Kirloskar. And Kirloskar Industries is demanding that the auditor should examine legal expenses which they say total about 70 crore rupees. To take you a little back into the recent past, the Securities Appellate Tribunal had dismissed an earlier ruling by the Securities and Exchange Board of India on the matter of insider trading in the shares of Kirloskar Brothers Limited.
Well, yes, Kirloskar Industries in focus today. But quickly switching over, we have Ashesha with us with all the stocks that are in news to look out for today. Ashesha, good morning.
Hi, good morning. So Marks and Pharma will be the first one in focus in today's trading session. This is after Systematics has come out with a report on the back of their analyst meet, where the management says that they see large headroom with respect to expanding in the United States. They've also said that Teva's Goa plant has the potential to double company-wide revenue, and they also say that revenue potential of this particular Teva facility stands at about 1,000 crores. Value accretion from the acquired Teva facility will be extremely high, and they also say that in the coming 3 to 6 months they should be able to launch new products in the United Kingdom as well as in the Australian markets. So on the back of these takeaways that are emerging from the analyst meet, Marks and Pharma will be in focus in today's trading session. Moving on to Bajaj Consumer, then that will be in focus because Board of Directors will be considering buyback in the Board of Directors meeting that is scheduled to happen on the 9th of December. Moving on to Vedanta, there the company has gone ahead and clarified on reports of the company to set up manufacturing parts in Odisha. The company has now clarified that they have received Government of Odisha's in-principle approval to provide hot metal to aluminium-dependent industries by inviting them to set up plants in that vicinity. So on the back of this clarification that has come in from Vedanta, keep an eye out on this particular one as well. Ahluwalia Contracts, next one in focus, and this is on the back of an order win. The company has secured order for construction of 5,000 seating capacity public auditorium in Assam, and the cost of this contract stands at about 175 crores. And lastly, HDFC will be in focus, and this is because LIC has marginally increased its stake in HDFC from 4.99%. It now stands at 5.003%. So on the back of this stake increase, HDFC will also be in focus in today's trading session.
Okay, Ashesha, thank you so much for those list of stocks to watch out today at 9:15 a.m. But let's go across to Vamakshi, who's standing by to tell us, what are the brokerages saying this morning as well. Vamakshi, very good morning to you. And what are the brokerages talking about? Which are the stocks on broker radar?
Well, absolutely. Let's first start off with insurance companies. We have a report that has come in from Ambit, and they believe that the opportunity in non-promoter banks is largely untapped. In fact, they also believe that term insurance will lead the next decade premium growth. VNB margins are also likely to expand. SBI Life is the top pick in the sector, and they've initiated coverage on SBI Life as well as ICICI Prudential as well as HDFC Life with a buy call. Apart from that, we also have PSU banks on our radar. Morgan Stanley has come out with a report on it, and they expect sustained loan growth, higher margins and lower credit costs for PSU banks. Apart from that, they believe that Bank of India and Bank of Baroda have a relatively better risk reward ratio. They've hiked the target price of almost all the PSU banks in their coverage barring SBI. So they have an overweight call on Bank of India, Bank of Baroda and SBI, while they have an equal weight rating for PNB, while they have an underweight call for Canara Bank. And lastly, we have IEX on our radar. We have a report coming in from Bernstein, and they believe that IEX is a great company. They have good governance, but they have a fundamental challenge, and that is that the transaction cost will come down eventually in their opinion. So on the back of that, Bernstein has maintained an underperform on IEX. They've given a target price of 123 per share.
Well, thanks so much for that, Vamakshi, and we'll move on. Gujarat Fluoro will be in focus after the promoter has sold a stake to infuse funds into Inox Wind. Samit gets us all the details on this one. Samit.
Well, yesterday Gujarat Fluorochemicals promoter sold close to 18 lakh shares in the company at a value of close to 3,275 rupees per share. So this must have generated close to a cash flow of close to 600 crore rupees for the promoters. Now, what most likely the promoter is going to do with this cash? They are likely to infuse this cash in Inox Wind, and Inox Wind will be using the cash inflow by the promoter to pay off their advances that they have taken from Gujarat Fluorochemicals. So in short, Gujarat Fluorochemicals promoter has sold its stake to infuse funds in Gujarat Fluorochemical itself through Inox Wind. Now, earlier, if you remember, Gujarat Fluorochemical had given close to 880 crore rupees of advances to Inox Wind to build a 100 megawatt of wind power capacity. However, Inox Wind is going ahead and executing only a 20 megawatt capacity, which may cost them around 150 to 200 crore rupees. And the remaining amount is something that Inox Wind has to give back to Gujarat Fluorochemical, and that will be done via this inflow that the promoter is looking to do in Inox Wind. And Gujarat Fluor had earlier indicated that Inox Wind will be paying off this advances by the end of this financial year, that is March 2023. Now, do remember that Inox Wind and Inox Green has also raised equity close to around 750 crore rupees, and the funds will be used to reduce its debt and to fund its growth going forward. And that reduction will also lead to lower corporate guarantees going forward. And the company is also in discussion with banks to revoke the entire bank guarantee because of the fact that its balance sheet has improved at this moment. So, given the sale of promoter stake in Gujarat Fluoro, not only Gujarat Fluoro but Inox Wind and Inox Green will also remain in focus.
Okay, Soumit, thank you so much for that, and keep an eye on those stocks as well. Let's move on to an ET report. Now, Aditya Birla Fashion is the front runner to acquire TCNS Clothing. Let's not forget TCNS Clothing owns women's brand apparel retailer, is a listed brand retailer who owns brands like W, Aurelia. And once this deal is actually concluded, this could be the largest branded apparel buyout by $60 billion conglomerate. Now, they had mandated Credit Suisse to find the strategic or the financial buyer, and the transaction will also trigger an open offer for an additional 25% stake of the company. So keep an eye out on Aditya Birla Fashions as well.
Well, yes, Vinny, and the other stock in focus is going to be Marksans Pharma, and that's on the back of their analyst meet. Systematics believes that there is a huge headroom with respect to expansion in the US. Let's look at some of the other highlights of the analyst meet. Lisa joins us with more.
Yes, so Marksans has updated on its recent analyst meet, and they discussed on various aspects such as pricing in US market and also its recently acquired Teva facility. So they see a large headroom with respect to expanding in the US market, as there are multiple product categories in the OTC basket where Marksans is yet to make inroads. Also, from its recently acquired Teva facility, they say that the value accretion will be extremely high, as the Teva's Goa plant has the potential to double the company level revenue, and the expected revenue potential of the Teva facility is around 1,000 crore. Also, in the next 3 to 6 months, they will be able to launch products to the UK and the Australian market from this Teva facility. Also, with respect to pricing, the management stated that the pricing in the OTC market is relatively stable compared to its prescription business. So that's the word coming in from the management of Marksans Pharma.
Well, thank you so much for that, Lisa. The other company which has met, or management which has met analysts, is HDFC Life. What they've suggested is the company is not comfortable in diluting the persistency from current levels, and in fact partners and distributors are being made aware of that. So the pricing difference will become meaningfully large, especially when it comes to Bima Sugam versus the other channels. So what the company has been communicating to some of its distributors is that they will have to take part in lowering of commercials if they want attractive pricing for their customers. So in the near term, ROEs may be impacted by the shift in business mix and also due to the higher denominator from the capital raise. Anecdotally, customers are currently spending on discretionary and postponing insurance purchases in any case. That's broadly the commentary coming in from HDFC Life.
Moving on, Indian markets are looking good for the next 3 to 6 months. That's the word coming in from Punita Kumar Sinha, the managing partner of Pacific Paradigm Advisors. Let's go across and listen in.
From a growth perspective, definitely India stands out quite well. And many of the global companies that I'm associated with, and I'm on the boards of a few of them, really everybody is looking towards India for growth. So whether it's for consumers, whether it's for office space, whether it's for outsourcing, R&D, software, technology, I think India is where everybody is looking to increase their footprint. So definitely from a growth perspective, I think India is definitely looking very good relatively. Of course, absolutely, the numbers are in the 6 to 6.5% range, which is slower than what it's been in the past. But from the rest of the world's perspective, India has really benefited from all the shutdowns and the supply chain issues arising from China. Now, of course, inflation, interest rates are a concern globally. I don't see inflation, in fact, in India doesn't seem quite as bad as what I see in the US. And in terms of the recession, I don't see a huge amount of slowdown coming in India. And frankly, I don't see a huge slowdown in the US either.
Right, but that's all we have on this edition of Market Cafe. We're completely out of time on this one. Of course, the market on the other side. But for now, from Vinny, myself, and the entire team that puts the show together, thanks for watching.